Give me one moment.
Brilliant. So welcome everybody to this session. If you're watching the recording back, well done for giving yourself the time. And those of you live, again, well done and thank you for being here. We are currently streaming live into VSGD Careers as well. So if there's anyone joining us on the VSGD Careers stream too, hello, welcome. This evening we are setting up for a session of Ask the Accountant, setting yourself up for success as a locum in the new tax year. So just before we do dive into the session, I'm going to tell you a little bit about VetYou, a little bit about how these sessions work, and then we're going to hand over to Richard and Rebecca from Gorilla, who are going to take us through lots of the pre-submitted questions and talk through lots on sole trader, limited company expenses. And we had so many questions come in for this session. In fact, we were blown away by the number of them that were being asked that we're going to try and get through as many as we can do. So briefly about VetYou, we are a group of vets. We came together at various points, firstly Paul, Matt and Ebony, and then I jumped in just over 15 months ago now. We're all really passionate about opening up conversations around finances in this profession because we truly believe that getting expert, timely advice to put you back in charge of being an independent you really does set us up for success, whichever path that we're going to take. And we break that down into 3 pillars: looking after our health and protecting our health, protecting our income and protecting our future. And tonight we're looking around the stream of looking after our incomes. And that might be if we're getting that as a different route, maybe as a locum, perhaps as a small business owner as well. And we realize that, again, these topics can be really intricate. So bringing in experts that really do understand our profession as being key. And that's why we run sessions like this. We like them to be really informal. We like to give you the option to have your questions answered. And you'll see that Ebony and I do keep coming back to this through this evening, but there is no such thing as a stupid question. You know, this is a really safe space. If you prefer to send us a direct message, you can do that on the Zoom chat here, or you can send a message to Ebony as well. We want to make this as open as we can do. We want to make this a safe space as well. So like we say, if there's something you want to ask, there is no such thing as a stupid question. And as you can see on the screen here, we've got the 4 directors of VetYou. We've got Matt Dobbs, Paul Horwood, Ebony Escalona, who is here and is currently keeping her eye on the Facebook chat on VSGD Careers as well, and myself, Katie Ford, too. So what do? We're not going to read all of this out, but you'll see that we help educate and signpost people in the profession on a variety of topics. And this evening, we're talking about accounting, which is a wide open topic. And we're so pleased that we've got some fantastic speakers this evening to take us through lots of the commonly asked questions and how you can set yourself up for success as a locum in the new tax year, which started at the beginning of April, well, on the 6th, technically. And why do we do this? Because we honestly believe that putting yourself in the driving seat of your finances, being in control, being an independent you, and getting advice that's timely and that's expert means that you can put your attention and your energy to the other things in life. You know, you've worked hard to get to where you are now, and actually making those decisions at the right time for you and with insights that maybe were not taught at school, at vet school, at college and so on, can make a massive impact further down the line. And that's why we spend all the time as a community opening up these conversations and forging these relationships with various companies that we know really do understand the profession. You'll see we've got a whole host of events. We'll pop the link in the chat box and on the Facebook page as well if you'd like to check out what we're doing. We've got a fantastic event tomorrow evening, actually, that is on negotiating salaries with Paul Horwood, who is one of the VetYou founders. I know that's going to be a brilliant session. We have done short 15 or 20 minute snippets with Paul before and always had fantastic feedback on those, on people coming back and saying, oh, I used his tips and I've managed to negotiate X, Y, Z in my latest salary negotiation or in my new job. So please do join us for that as well. And if you can't make it, sign up because you'll get the recording too. You'll see here, we've got a fantastic set of partners, connections, people that we've curated along the way that really do understand the profession. And if there is anything on the list of events that you think, oh my goodness, I'd really like to speak to someone that is doing X, Y, Z, and we've not got to that event yet, get in touch with us because we'll probably be able to direct you to someone or some resources before then too. So you don't have to necessarily wait. But this evening, we have been thrilled to get in touch and be able to host the fantastic Gorilla accounts who, when we started looking through their credentials and their reputation, we've been blown away by the level of service that they offer to their clients, and also by them being #1 on Trustpilot too. We've had plenty of conversations with the whole team, and it's clear that they do understand our profession. They work with a lot of vets, they work with a lot of medics, and they really do have a lot of time for their clients as well. And we were really, really impressed with that. So again, we said this before, but there is no such thing as a stupid question. So if there is anything that you want to ask or you want to jargon bust, in fact, you know what, Ebony, you can go through our jargon busting because you always explain it so well.
No, I don't want to take up too much time. I want to get these experts chatting. But look, we know that finances can be a funny thing. And sometimes when we don't understand something or we hear jargon, or we're like, oh, I don't understand, I'll just keep quiet. Please don't. Every time you hear jargon, acronyms, something you don't understand, call it out. Every time you do, we're racking up our little pot of money to give to vet life every time jargon is mentioned. So please do call it out. Because if you're thinking it, I'm thinking it, Katie's thinking it, and a whole heap of other people are too.
Definitely. So call us out on it, get your questions in. And without further ado, I would love to hand over to Richard and Rebecca, who have both kindly joined us and gifted their time this evening to us to answer your questions and take you through an introduction to setting yourself up for success as a locum in the new tax year. And also we've pre-fed them all the questions that you submitted. So we're going to try and cover as many of those as we can do. So Richard and Rebecca, over to you two.
Hi, everyone.
Thank you.
So yeah, just as an introduction, myself and Rebecca both work together at Gorilla. We're both qualified accountants, and bit of background about Gorilla. We're a specialist accountancy company that work with locums and freelancers, and it's basically our client base of people like yourselves. So any questions after, or there's anything that we don't cover, or you want to know a bit more, please do get in touch, and we'll be able to help with anything that you've got. Just as a starting point of what we're going to go through. So first of all, Becca's going to start off with limited company versus sole trader, just to go through the difference and the benefits of each. I'm going to briefly touch on IR35, just for anyone that doesn't know what that is and how that might have an impact on you. And it does sort of impact the limited company and sole trader options as well. One of the big things is always expenses. So, everyone wants to know how to lower the tax bill and how expenses, what expenses can be claimed. So we're going to do a bit of a session on that as well. And then we're going to finish off with recent changes. So what's changing this year, things like national insurance. And then anything that we've not covered, we'll go through the questions at the end. And obviously anything that comes up during the talk, please do reach out and we'll try to answer them as we're going along, or if not, at the end. So Becca, if you're all right to pick up the limited company and sole trader part.
Yeah, of course. So the main difference between sole trader and limited company is the personal tax element of it. It doesn't mean that you're not going to pay any tax if you go through a limited company, but what it does mean is that you can distribute your profits a little bit more evenly over different years and therefore lower that personal tax bill. Through a limited company, you will pay corporation tax on the profits that are made in a company year. Currently, that's at 19%. With sole trader, you'll pay personal tax on all the profit that you make as a sole trader, and that can be at 20%, 40%, or 45%, depending on how much you're earning. If you do go through a limited company, and you're not caught by the IR35 legislation that we'll touch on in a little bit, it allows you to increase your expenses, take salary from the business, which is an allowable expense, lowers your corporation tax bill, and you can work it so that it can be tax efficient for you. And then you can take dividends out as well, which are taxed at a much lower rate than salary would be. They're currently 8.75% within the basic rate, 33.75% in the higher rate, and 39.35% in the additional rate, which obviously is quite significantly different from sole trader, where it's 20, 40 and 45. As it's already been said, sometimes these things are very specific to a person's circumstance, depending on how much you're bringing in, can have a big impact on what we would advise, which route to go down. It would be dependent on profit. So if that is something that you'd like a bit more information on, I'd probably suggest having a bit more of a one-to-one conversation about it, and we can actually take it further on your personal circumstances. The other thing to bear in mind with sole trader income is the national insurance that you would pay on the profits is class 2 and class 4 national insurance that you would pay. But yeah, we normally, if you're not caught by IR35 and your profits are going to be significant, we'd probably suggest going down the limited company route to mitigate the personal tax that you're going to be paying over. But sometimes that can't be the case due to these IR35 legislations, which I'm assuming is why we've got so many sole traders watching this webinar, probably.
There isn't, a set route which is best either way. It can be sole trader, it can be limited company. So it's one of those things you need to look into. And I think, as Rebecca said, the national insurance is really important, because with a limited company, you can actually set the salary at whatever level you like. So you can avoid paying the national insurance, providing your engagements are outside IR35. You can claim expenses either way. So there are some differences which we'll come on to later, but broadly they are the same. And if you've got an allowable expense, you can claim that as a sole trader or as through a limited company. I think another point as well is with the limited company, you probably should have an accountant if you operate through a limited company, because there's annual accounts to file, there's corporation tax return, and although it's good to have the advice as a sole trader, if you're organised, maybe you can sort of look after your things yourself and maybe just have an accountant to help out, with the self-assessment each year.
We've, Richard, just had a couple of questions that come through that I think do align quite nicely with this topic. The first one is, for sole trader, which order do you take off national insurance and tax, please, to start with?
So what happens is you've got different thresholds, tax-free thresholds. So your income tax up to 12,570 is tax-free, and then you pay 20% on top of that. Up to 50,270, above that is 40%. So that's how it works for your salary income and also your sole trader income. If you've got a mixture of both, that gets used up between the one first and then the next. For national insurance, there's slightly different thresholds. So, sorry, just bear with me a second. It's, I think, 0% for class 4 national insurance, 0% up to 9,880. And then on top of that, it's 10.25%. But you also pay class 2 national insurance, which is £3.15 per week, but it all gets added onto your self-assessment. So it depends on the level of income that you have, at what rate you pay your income tax and national insurance. It works in a similar way to how it's collected through your pay slip, really. You pay, the more income you have, potentially the higher rate of tax you're going to pay on that income. And
we've had a couple of questions again around limited company and sole trader just coming in now. So I know you said a lot of this is quite individualized, so there's not like one's better and one's worse, but somebody's asked, is it worth being a limited and a sole trader? Are the benefits to doing both? So I'll start with that question for you.
Yeah, so you can do. There's nothing to stop you. You can be a sole trader, have a limited company, have employment as well. You can have some. We work with people who've got more than one limited company, have different businesses as well. So there's different things. I think the only thing to bear in mind is, like I said, with a limited company, you're probably going to need an accountant, and the more sort of complications you have, that maybe that makes it a bit more difficult. But there's nothing to stop you from doing that. You might, being a locum, you may actually come across that, because you may work for a limited, which we see quite a lot, work for a limited company and then get your next contract or your next work assignment, and that's paid differently. They want you to work as a sole trader or through an umbrella. So it's one of those, it's probably not worth closing your company down if you're intending to come back and work through the company again. So if you've got 3-month contracts doing something else, then it's probably better to keep the company open and ticking over while you do that. So you might end up falling that way. So yeah, there's nothing to stop you from doing it. And the best way to look at it is have a look at your income. So if you're going to have an umbrella income and sole trader income, basically what happens is you're paid that each tax year and you have to pay tax on that. With the limited company, you can be a bit more flexible. So you might want to look at how much you pay yourself in dividends in that tax year and, you know, keep that money in the company. So yeah, it's something that needs looking at. There's a bit of work involved, but there's nothing to stop you from working that way.
Yeah, that makes total sense. Thank you, Richard. And finally, again, on a similar ilk as well, someone's commented here and said, as a veterinary nurse, which could be best for me, sole trader or limited company? And I know you were saying sometimes limited company can depend on how much you're bringing in. Is there like a bit of a cut-off income-wise where a limited company becomes more useful than being a sole trader?
Yeah, I mean, it varies. It's what I suppose for us, we charge a monthly fee for the limited company. So that's something to take into account. So our monthly fee for Gorilla is £95 plus VAT. There's some accountants charge more, but first thing to work out is the tax saving worth, paying the extra money for an accountant. Usually when your income's getting above, I suppose, around £25,000, it does work out better to be a limited company, but there's other things to consider as well. And another one is that with a limited company, you can have more than one shareholder of the company. So, for example, if you're married and your spouse can be a shareholder, and you can actually pay dividends to your spouse. So that's another separate issue. We look at each individual. So, if someone wanted to chat with us, we can work out the best way to go. And we, obviously, if the sole trader is the best way, we'd advise you to go with that.
And I think all those snippets that you shared there, Richard, all those little intricacies as well and differences that there can be are just testament to why sometimes it's best just chatting through your individual circumstances as well, isn't it? Like you said about having your spouse on a limited company and then maybe getting their dividend allowance as well. So we can pop details if people do want to get in touch directly, but I think that gives us a really good overview as to generally between the two. And I'll let you carry on. I thought they were just good questions that just tied in at the right point.
So just briefly touch on IR35, just to sort of explain it. If anyone's heard, a lot of you probably have heard it in the sort of area that you work in, and know that it impacts you. And a lot of the time you'll hear about it, and the decisions have been made by the company you're working for or the agency. So I'll just explain what it is, just so for anyone that doesn't know. Basically, it's some legislation that was brought in, I think back in 2000, and it was designed to stop someone who's an employee of a company. So, for example, me and Becca work for Gorilla. We're employees. We are told what to do by Gorilla and so on. But stopping from being paid a salary for employee where we pay tax on our salary. Gorilla pays national insurance as an employer as well, and saying, well, what we'll do, we'll just send you an invoice each week, and we'll save a bit of tax. You save a bit of tax, and everyone's a winner out of that. So basically, if you're a genuine sort of business or independent, genuinely self-employed, then you wouldn't fall in within this legislation. And one of the things is direction and control, and that's how you work. And I think with locums, you do have. You're quite independent in how you work. You did make the decisions when you're doing that. So you probably fall outside IR35. But what's happened is a couple of years ago, there was a change in the legislation where if you're working for what's seen as a large company or through an agency that deals with a large company, then that decision moves up the ladder, and it's the company that's engaging you that makes that decision. So a lot of them, to avoid, I suppose, something coming back to them because they would be stuck with a tax liability, just decided to, say everyone's inside IR35 and move people through umbrellas. And we saw a lot of that with the people that we work with. And I'm sure you've all seen that as well. in the sector that you work in. So that's the reasoning behind it and how the legislation come about. What we're seeing is a lot of companies are sort of changing the tune a little bit and saying, because people have basically said, well, we'll not work with you if you're going to operate that way. And they're starting to, be a bit more sort of open-minded and actually look at things properly. So hopefully, anyone that's been forced through an umbrella that didn't work that way before, it's looking a little bit more positive from what we see. Right. So the next section is expenses. What's, a lot of common questions that we get are, one, what expenses can I claim? How can I save some tax? So it does sort of link in, and there are some common ones which, maybe you all know, but there are some ones that maybe you've not thought of. So we're just going to go through some of the common ones, and hopefully you'll take something from that.
Basic rule is, if you think it's for business use, then it's probably going to be allowable. Basically, if you've got to travel to your workplace, and it's a temporary workplace that you're working at, then you'll be able to absolutely claim the cost of that. If you need to stay away for a conference or anything like that, obviously you can pay for the conference or the thing that you go to and the accommodation. Standard stuff like, I'm assuming you guys need all kinds of professional equipment and protective clothing. So anything like that, absolutely stick that through, be it limited company or sole trader. Various insurances that you might need to have in place. Subscriptions, memberships to professional bodies, mileage as well for your car. I know somebody had asked about company cars, which again it's another specific, can be quite different depending on the car that you want to get. But generally, you can either have a company car if you've got a limited company, or you can put through the mileage that you've travelled on your personal car. And that's 45p a mile for the first 10,000 miles, and then 25p a mile after that. With company cars, it used to be very much that they weren't worth putting through a limited company that was owned by the sole employee, basically director and employee, the same person. But now with the introduction of electric cars, it can be quite beneficial to pop that through as a benefit in kind, because the tax that you're going to pay on it is going to be at such a low rate that it can actually be more beneficial to put it through than paying for it personally. And yeah, there's home as office as well, which is obviously, if you guys are working for yourselves in any capacity, you're likely going to be using your home to do some of that catch-up admin. And it's not a great deal, but it's £312 a year, and that's unreceipted. So you can pop that through on your self-assessment if you're a sole trader, or through a limited company as an expense that way as well.
I think we did have a question on claiming for meals and refreshments as well, which it links into the travel. So if you're if you're doing locum work and you're working at a temporary workplace, you can claim for the meals while you're going out at the client site. So if you can claim for the travel, you can claim for meals as well while you're there. And that's just generally, purchase while you're out there. So if you get a sandwich or a meal, then that's fine.
And Richard, is that for sole traders and for limited company directors that can claim that food, say your lunch when you're on a locum shift?
Yeah, that's right. And just on the sole trader one as well, it does work a bit differently with the cars. You can't, if you own the car personally, then you can still claim mileage, or you can opt to pay for the part of the costs. So, but then you need to work out the percentage of the time you're using the car for business use. So you would cover the costs of, let's say it's 50% personal, 50% work use. You can claim for 50% of the servicing, fuel, etc. So it does usually work out better to claim the mileage at 45 pence per mile, cover all the costs yourself with that.
We've had a couple of questions again in the chat, which just well timed. The first one is, can I claim my car insurance, personal car, but covered for business use?
No, if you pay for it personally, but the 45 pence per mile that Becca mentioned before, that is designed to cover sort of the additional cost. So actually the cost of fuel would be less than 45 pence per mile. So, you know, the more you use the car, that 45%, although it's not gone up for years, has it? So I don't know if that's ever going to change. But yeah, it is supposed to cover the, you know, the extra costs and the wear and tear on the car for using it for business mileage. So the 45 pence is designed to be a higher amount than the actual fuel cost that it would be per mile. So you pay for everything personally and just claim 45 pence each mile to 10,000 miles.
And Richard, what sort of record should people be keeping of this? Like, is it best keeping it all in a spreadsheet or somewhere for the accountant of like the individual journeys that they do? Like, have you got any top tips around that?
Yeah, so it's a spreadsheet's fine. We use a software called Free Agent, and basically you plug your mileage in each day or each week, and it converts it to the amount and shows what's owed to you, but it also accounts for it as well, so it adds it as an expense on there. So I have some sort of bookkeeping software, or if you're looking after things yourself, just put it on a spreadsheet and add up what's owed to you at the end of the month, and keep that in your records when you're doing your tax return or company accounts at the end of the year.
Yep, super helpful. Thank you, Richard. And finally, just another well-timed question. Somebody's just asked, and there's kind of two parts to this, so I think this is going to be useful on a couple of levels. Can I put computer antivirus software on expenses, and I pay this every 2 years? So how does something paid 2 yearly work with taxes?
Yeah, so the answer is yes. And what happens, basically, if your computer is for business use, then anything associated with it, antivirus software, anything that you need, is fine to claim. So the 2 years, strictly speaking, if it's something every 2 years, you split it out. 1 year, you put 50% in, and 1 year the other. Now with sole traders, you can actually, it's called cash accounting, where each time you pay for a cost, that's when the expense is triggered. So, but generally speaking, the correct accounting rules are you're supposed to accrue for it, we say. So you put 50% of the cost in 1 year, 50% of the cost in the next year.
That makes sense. And someone's commented and just popped in here as well, given the recent changes with fuel prices, and maybe you see this on the horizon as accountants, although you did just comment on it not having changed, is there going to be an increase in how much we can claim?
Well, I would have thought so. Me and Rebecca have worked together for about 12 years, and it's always been 45 pence a mile. So yeah, I don't know.
An increase.
It is, isn't it? I'm sure that fuel that long ago was probably about £1, wasn't it? Not £1.75.
Yeah. So yeah, I don't know is the answer to that. You know, you'd think so. It's only reasonable, but yeah, the way things are looking at the last track record, I'm not sure if it will.
They seem more inclined to be pushing people towards electric cars, I think, is the main thing. So I wouldn't hold your breath, but it is due. But yeah.
Fingers crossed. Thank you so much for answering those so well, both of you. I'll let you carry on. I thought they were just, again, well timed. So thank you.
Yeah. Oh, sorry. One thing I've just thought of, mobile phone. So you can have a mobile phone if you're, you know, an employee. So if you're working for your company, or if you're sole trader, what you need to do is roughly work out how much you use it for business and how much you use it for personal, and split the costs. Like I said before, it's 50% each, 50% personal, put half of the cost of the mobile phone. Hmrc are not going to go and check your phone records to see how much you're using it personally, but you know, it's just something that you should you know, fairly estimate.
And if you have a limited company, as long as you get that phone in the company name, Hmrc do accept that there will be personal use on it as well. So it can 100% go through as an allowable expense.
And so the next part, which is just a short piece, so it's just some of the changes that have happened in this tax year. So the main one is the social care levy, health and social care levy, which is actually an increase in the rate of tax for national insurance. It's pretty hard to avoid this tax increase, to be honest. So employees have had it. It's 1.25% on top of the rate. So employees pay national insurance at 12% mainly, and then it goes to 2%. As I said before, the rate also has gone up by the same amount for sole traders as well. So that's a 1.25% increase. on the rate that you pay national insurance on every part of it. So that's gone up from this month, so this new tax year. You don't avoid it if you're receiving dividends from a limited company, because the tax rate on dividends has also gone up by 1.25%. So what the government, I think, are saying probably fairly is that, you know, whatever way you receive your income, you're going to suffer that tax increase, and the same for employers. So that's something that's kicked in this year. To be fair, they have increased the threshold, the tax-free threshold. So you do get a little bit extra tax-free before you pay the national insurance. So that particularly helps out, you know, lower earners. But yeah, that's a tax that's, you know, going to hit everyone really. Another thing to be aware of, and I don't know how many people are VAT registered. You know, veterinary services are VATable services, but you don't have to be VAT registered until you're either sole trade or limited company income reaching the threshold of £85,000. But anyone that is VAT registered, you are now required to submit MTD VAT returns. So MTD VAT returns are through an MTD software, and they're digitally sent over to Hmrc each quarter. So from April, anyone that's VAT registered is required to submit the VAT returns through MTD.
Richard, we might just have to call you out on an abbreviation that's not being explained there. MTD. Someone's called it out in the chat as well, actually, so well done. We'll be giving some money to VetLife, but can you explain what MTD is for anyone that doesn't know?
It's making tax digital. So Hmrc, this is their big thing that's been ongoing for about 5 or 6 years and kept pushing it back, but now it's finally with us with VAT. And actually, you just reminded me, it's actually going to come into force for sole traders as well in 2024. So you've got a couple more years, but anyone with profits of over £10,000 will be required to do MTD, make tax digital submissions quarterly. So instead of just doing the self-assessment, you'll need to do quarterly submissions to record, you know, your profits. That's for sole traders or landlords with property of £10,000 or more. So that's one further down the line, but it's something to be aware of at this point. Just one more as well, not for this year, next year, the corporation tax rate does go up. So it's not going to affect anyone with profits of £50,000 or less. So a lot of smaller businesses that we work with will still stay on the 19%, but for companies with higher profits, it potentially is going to go up to 25%. So whether there's some rumours that won't go ahead or will be changed before then. It comes in line with an election next year, so there's some people are saying that they've made it high to reduce it again before then, but we'll see. Okay, and we've got a list of questions here, so hopefully we've answered some of them, but I think if between myself and Becca, we just go through some of those questions now, if that's all right, and obviously just shout out if there's anything you want to ask while we're doing that.
Yep. Brilliant. So I'll keep my eye on the chat box. If anyone does want to throw anything else in, then please do. This is time to get your questions answered. We've got a whole list of them, and I know that we've had a couple more that have come in the chat as well, so I'll fire those in as well. But back to you, Richard. Thank you so much, everyone, because you were brilliant at submitting your questions. We've got tons of them.
So the first one is maternity pay. Can I get maternity pay if I work for a limited company? The answer is yes. You do need to be an employee of the company, so paid a salary, and then the maternity pay is worked out based on that salary. So it looks back over a period, I think 6 months plus, and you get, for the first 6 weeks, you get 90% of your average salary, and then after that it moves to a fixed amount, which is the same for everyone per week. So yes, you can get it through working for a limited company. You need to be an employee of the company and be receiving a salary from the company to get that. So any employees, as a director, when you get paid a salary, you're just an employee of the company as well.
You can also,
oh, sorry, go for it, Rebecca. You're probably about to answer what I'm going to ask.
I was just going to say that if you're self-employed, there is a thing called the maternity allowance as well. But it just depends how much, I think it's class 2 national insurance contributions. It looks back at how many of those you've made in the 66 weeks preceding the due date. But that is available. It sort of slides from about 25 quid a week to the 156.66 a week, which is the statutory that everybody's due.
Yeah.
And with the limited company director, obviously, if you're an employee of your own company and you're being paid a salary, and do you have to have been paid a certain salary for a certain period of time before it's allowed for maternity pay, or is it a bit more intricate than that?
It's 26 weeks, basically. 26 weeks up to the qualifying week, which is the 15th week before the due date. It is confusing, but basically, yeah, like Richard said, it's about 6 months. You have to have sort of been an employee of the business. And then you just need the same form that you would need for any employment from the midwife. It's called MAP B1 form, just to keep for your own records, because you're the employer as well as the employee. So yeah, it's just the same as it would be if you were anywhere.
Super, thank you so much. We've just actually had a really good question in the chat, which I hope you don't mind if I jump in with this one before we go back to the list. I have a full-time job that's been paid by PAYE. I locum on the side. How does this affect my tax, national insurance and student loan? Is it still based on the total amount I earn per year? Is there anything we need to be aware of if people are doing things alongside a full-time employed role?
Yeah, so one of the good news is if you've got 2 different forms of income, so a bit of sole trade work and an employment, you actually get a national insurance threshold for each one. So, but your income tax, all your income is just pulled together, and then you pay tax, based on the whole amount. So yeah, there's nothing to stop you. And similar with your student loan, there is a threshold, which it depends on which plan you're on, but plan 1, I forgot which is 21,000 or something.
20,195.
20,195. Anything above that, you pay 9% student loan. So yeah, your total income's looked at for your student loan repayments as well.
And do they then have to submit a separate tax return as being a sole trader as well? And then anything that I'll leave it to you guys on that one. But yeah, they have to submit
a self-assessment. You need to do a self-assessment, and unless your sole trader income is £1,000 or less, which is not taxable, so you don't need to do anything. But assuming that you've got more than that, you do need to report it and put that on your tax return. And you also put your employment income on there as well. So what happens is your employment income, you put that on, your tax paid from that as well, and then you add your self-employed income, works out the total tax, deducts any tax already paid, and gives you an amount to pay of tax, and also your student loan as well, because there'll be some extra, although student loans collected through the pay slip as well, there will be some extra on the income from your sole trade business.
Okay, so if they're employed somewhere else, but they're doing shifts elsewhere as a sole trader, they need to do a self-assessment unless it's less than £1,000. And how do they register to do a self-assessment?
Online, there's if you just Google register for self-assessment, we do it for our clients, but it is straightforward. You just need to say what sort of income you've got, the date you started receiving the income, add your name, address, and national insurance number, and they will send you what's known as a UTR number, which is a specific 10-digit number used for your self-assessment. So yeah, register online with Hmrc, and they'll send that out, and you then have the pleasure of completing a self-assessment every year.
Amazing. And is there a time lag? Do you get like an allowance? Like suddenly imagine if someone's employed now and they decide they're going to do a shift as a sole trader in like a week's time, do they have to have been registered as a sole trader for so long, or have they got like a grace period to register with Hmrc?
You've got plenty of time, to be honest. So your self-assessment tax return is only done the following tax year. So for example, now if you started trading now, it's only just at the start of the tax year. So it's going to be, the tax return is going to be completed in January, only needs to be filed by January 2024. So the end of the tax years, 5th of April 2023, and then you've got till 31st of January 2024 to complete that. So you've got plenty of time. You need to register by October, so October 2023, to just so you've got enough time to get the UTR number and everything before. We advise getting it done sooner because, you know, it's good to keep track of where you are with your taxes, because if you're paying tax almost a year after the tax year's ended, you know, you've already had that income, potentially already spent that income. So it's worthwhile keeping track of how much you owe, do your tax return sooner rather than later. So yeah, it's good to do it sooner, but you don't actually have to until a bit later on.
Thank you so much, Richard. I feel like that is like palpable relief potentially for people. And we have just given another £5 to VetLife because we believe that UTR was used a couple of times. If you can explain that one very briefly.
It's unique taxpayer reference.
Thank you. And is that a reference number that is going to be obviously unique to an individual that gets sent that out to go on paperwork and things?
Yeah, that's like an NI number, but for a director or a sole trader.
Self-assessment, yeah, it's for self-assessment, yeah.
Super. And again, I know we've gone off piece a little bit with the questions, but this again ties in quite nicely, is if you're a sole trader, how do you pay your student loan? Is it a lump sum at the end of the tax year, like for tax and national insurance?
Yeah, it would be. Yeah, it's worked out on your self-assessment tax return and forms part of the final balance to be paid.
Amazing. Thank you. And I know we're looping back very swiftly to the previous question that we had, but someone's just sent me an anonymous question, just looping into that one on maternity pay. How long do you have to have been a sole trader for before becoming eligible for maternity allowance? I know we'd said for limited company directors / employees, but is there a rule for that on sole traders?
It's to do with how many class 2 national insurance contributions you've made. So they will look at the 66 weeks before the baby is born. So, and like I say, it's a sliding scale where it comes to the maternity allowance rather than statutory maternity pay. So it's not a hard and fast rule, but you're going to get more if you've made more of these class 2 national insurance contributions in the 66 weeks preceding the due date.
Amazing. Thank you so much, Rebecca. We really appreciate, honestly, you guys spending so much time going through these questions. I feel like we're getting through some absolute gold here as we're getting through so many of them. And just before we do head back to the list again, somebody has asked, what's the percentage of income I should save to then pay the taxes in the end of the year as a sole trader? Like, do you have any tips? Or I know obviously there might not be, everyone's an individual, but in terms of like a rough amount so people know they've got that peace of mind, they've got enough to pay the bill at the end. Have you got any insights, both of you?
It does vary. It really depends on how much income you've got. We can do like a projection, you know, and we can sort of work it out, and then based on what we think you're going to owe. But because the tax rate, the percentage changes based on your income. You know, if you've only got, you know, £15,000 income, you're not really going to pay much tax at all. But if you get over the high rate tax threshold of 50,270, then your tax rate jumps up to 40. Some people keep 20% as a base, but it's not necessarily accurate doing that. So, you know, we would work it out, and like I said, if you know what sort of amount you're going to receive per month, we can sort of work out what it's going to be at the end of the year, and then you can save from that each month. So it does vary, is the honest answer.
Thank you so much. And hopefully that answers the question that's been in the chat. Let us know if there's anything you want to add to that. And I shall let us get back to the list of questions. Please do keep your other ones coming into the chat. I think we've had some fantastic interaction this evening. So Richard, back over to the list of pre-submitted ones for the next one.
Can I lease a car for the business? Do you want to do that one, Becca?
Yeah, so we briefly touched on it before. Yeah, you can. Stipulations, obviously through a limited company, the stipulation is that it's in the business name and it's paid for by the business, and then any associated costs are paid for by the business and in the name too, like the insurances and anything like that. it would be a benefit in kind. Again, it depends on what type of car it is. The main thing to consider is the fuel type. I think, before Katie was talking about big Land Rovers, that diesel guzzle and things like that, you're going to be paying a benefit in kind amount, which is a tax rate on, if you take the list price of the car and then they apply a percentage to it. I think the highest one at the moment is it 37%?
30 something, yeah.
Yeah. And it's always off the list price, no matter how, if you get a secondhand car or you have the car for a few years owned by the business, they always go off that initial list price. And then they take that 37%, and then you're taxed at your marginal rate on that, be that the 20% or the 40%, whichever, wherever you fall within that. Now, if you own a limited company, there are ways you can look around altering salaries and things like that, dependent on your benefit in kind. But more often than not, we see people going for the much lower benefit values of the electric cars, because currently, I think it's 2% on the list price of an electric car rather than that 37%. So it's just so much, you're going to pay hardly any personal tax on it. And then also you get the corporation tax relief of being able to put that expense of the car lease through the business. And if you're leasing a car, and you're VAT registered, you can claim 50% of the VAT that's incurred on that lease too.
Thank you so much, Rebecca. Oh, go on. Go for it,
I was
Richard.
just going to say, just following on from what Rebecca said, and she really touched on it there, with the benefit in kind being based on the new list price of a car, even if it's second hand, and the percentage being so high, the tax charge on high emission cars, if you in many ways you're better off purchasing the car personally and then just claiming the mileage for the business mileage, because the tax charge is so high. It's like you're receiving basically an extra amount on your tax bill just on having that car. So again, we can work that out, but generally, if it's high emissions, it's not worth getting it through the company. It's going to be such a high tax charge. You're better off just paying for the cost personally.
Makes total sense. And in terms of, obviously it's a benefit in kind and you're leasing it through the business, are there any rules around personal use of that vehicle as well? Is there anything to be aware of on that front?
The benefit in kind covers your personal use. So it's basically saying your company is providing the employee, so yourself, a car. And so they say, well, you got, if it was strictly just for business and you're only using it for business, then, there won't be a benefit in kind. But the issue, one of the issues is this, what Hmrc says, that if that car is available for you to use. So if you work for yourself and your car's on your driveway at home, then they say, even though you maybe only use it, a bit different if you've got a van or something, but Hmrc say if that's available to use, then there's a benefit in kind charge.
Super, that makes sense. And again, on the cars and electric cars front, we've just had a question in the chat saying, should the car be bought outright, leased or financed for an electric car that's going through a limited company?
Either. Yeah. The company can purchase it outright, can get, I think there's a couple of different ways that you can get a lease, like a hire purchase or just a general lease where it's going to be returned. So either way is fine. The tax treatment's the same, whichever way you go.
The only thing is that you can only reclaim that 50% VAT if it's leased. You can't reclaim any VAT if you purchase it outright.
Super. Oh, thank you both so much. And I shall let us come back to the list. I know cars are always a popular topic when we do these sessions on the best way to claim benefit through those. So thank you for covering that so thoroughly.
Yeah, no problem. I have some expenses on my PAYE salary. How easy is it to remove them? So it's pretty easy, to be honest. You can set up a personal tax account. So again, if you just search for that on Google, and once you've got that set up, you can just remove it online or on your phone. There's an app, or you can ring Hmrc, which is probably easy to set up a personal tax account, to be honest, unless you want to sit on hold for an hour or so. So yeah, either way, you can ring them up. They'll remove it from your tax code, or you can just do it online. So if you search personal tax gateway or personal tax accounts, Hmrc, and you can set up an individual tax account. It's worth having that because you can see all your income on there. You can make changes if you do have expenses or need to remove them, and you can see all your tax paid throughout the year as well. Okay. So we've covered expenses. Next one, how do 0 hours contracts work? So this, to be honest, this is something, it's between yourself and the person you're working with. So it's not really an accounting thing, because tax is paid on whatever income you have. But I think what you're getting at is kind of the requirement to work through an umbrella rather than be an employee. So one of the things with contracting or locum work, you may be asked to pay tax through an umbrella like you are an employee, but you don't have the rights of an employee. So employees, essentially get sick pay, you holiday pay and things like that. So again, I think that's something to speak to either your agency or who you work with in regards to that more than anything. It's more employment legislation rather than tax.
We've got so many questions on there, don't we, Richard? It's deciding the best ones for us to start asking.
How do VAT returns work is the next one. So do you want to do that one, Becca? Pick that one up.
Yeah, sure. So you don't obviously, as a limited company or sole trader, you could have to be VAT registered for either. If your taxable turnover is over £85,000, you would need to be registered. And basically, the way we normally see it work is for a VAT return is we ask for the invoices and expenses in a 3-month period, because they're normally submitted quarterly. And you'll have charged 20% on your invoices to your clients. You might have some expenses that have 20% VAT charged on them. We do the calculations to take off what you're reclaiming versus what you're paying. We submit it to Hmrc, we send you the payment details, and you make that payment. Most locums, I would have said, do incur expenses that are VATable. So being standard rate is probably a good idea, because then you can reclaim the VAT on those expenses. There is a scheme called the flat rate VAT scheme, and basically that means that you pay over a smaller amount than you've charged on your invoices to your client. It's worked out on the gross of the invoice. It's not like a straight swap percentage wise, but you pay over less than you've charged. So therefore you're generating a little bit more turnover for the business. But in that instance, you wouldn't claim any of the VAT back on the expenses that had incurred it. The exception to the rule is if you have a capital purchase, say a computer or something that costs £2,000 or more, in that instance, you can reclaim the VAT. But yeah, for submitting VAT returns on the standard scheme, it's basically just the VAT charged less the VAT incurred, and that's the amount that you need to pay over.
Thanks. So the next one is, I have side income as well as locum work. Is it possible to put this through a limited company, even though the additional income isn't veterinary work? The answer to that is yes, but there's some reasons why it might not be worth doing it, and it all depends on, what you're doing and how much income you're going to get. So extra income may mean that you're required to be VAT registered, and it's not always the best way to go. That in some ways, like one of the reasons, let's say you're making, selling products, or you do a bit of craft work or something, selling things on the side. If you're selling that to individuals, then they can't reclaim the VAT. So it's an extra cost that you're adding on to what you're selling. With the vet work, if you're, invoicing a big company, then they just reclaim the VAT. It doesn't matter. So it can make your products or whatever you're selling more expensive because you've got to charge VAT. And in some ways, it might be better to do them individually, depending on how much income you've got, because like we said before, there is a £1,000 tax-free allowance that you get from your individual sales. So yes, but it's worth looking at whether it's better to do it that way or not. So you can have more than one trade going through the company. There's nothing to stop you from doing that.
So if, for example, say someone theoretically has a limited company and they're VAT registered there, if they trade elsewhere, say as a sole trader somewhere, do they still get implicated for VAT, or can they go sole trader without VAT implications there?
The VAT would only be applicable for the limited company work. If they were doing sole trader work, it wouldn't necessarily, they can be VAT registered sole trader as well, but they wouldn't necessarily have to be.
That makes sense. Thank you. And we've got a quick question that's come in the chat as well, looping back to the umbrella company discussions that we're having. How does holiday pay work through an umbrella company? I.e., how much do you get and how often does it get paid to you?
Well, there's quite a lot of articles on this. There's been some umbrella companies that haven't been paying out the amounts. It's supposed to be built in, and that is, it's supposed to be paid to the worker. So if you work there for a set period of time, that holiday pay should be added into the amount that you're paid. If you're not taking holidays, you should still be receiving that. So check if you're working for an umbrella that's being done correctly and you're not missing out on anything there. So yeah, check with them that you're receiving everything that you should be.
Super, thank you. Good point there. Good take home if anyone is with an umbrella company, to go and check that one out after this call as well. Make sure you're not losing out. And I reckon, because I see we're just coming up for past, and we're always very aware of everyone's time. So if anyone does need to jump out, please do. We're going to keep recording. I reckon we've got time for probably 1 or 2 more questions, because it's been an awful lot of talking for both of you this evening as well. But is there anything else that jumps out on that list of questions that we can quickly run through at the moment for you, Richard?
Yeah, I've heard that registering for a limited company with the word vet is tricky. Do I need a letter from RCVS or something? So yeah, you do need a letter to do that, but it is quite straightforward. We do inform our clients, if you have the word in, you need to get permission first to have that in, and once you've got that, send that onto Companies House. So yeah, it can be done, but you need the permission to do that. I think we check up on you that you're obviously qualified and who you say you are before allowing you to have that name in the company name.
Good insight there. That's a top tip. I've heard a few people over the years that have gone to register a company name with vet in there, and then that's been bounced back at them, that they need to have that permission there for that. I'm just looking through these as well.
The next one, sorry,
go for it.
Do I need an accountant? So
I was just looking at that one too. Go for it.
The answer, the short answer is no. You don't need an accountant. You can look after things yourself. I'd say, certainly with a limited company, there's a lot more to think about, and you've got to file accounts with Companies House each year and corporation tax return, as well as your self-assessment. And I think it's good to have that advice as well with limited company, as far as how much you should pay yourself, dividends. There's a lot more to think about. So I would say yes with the limited company route. Sole trader, probably a good idea, but it is possible to keep your record yourself and just add that onto the self-assessment at the end of the year. We do sort of a one-off service, or we do a monthly service for sole traders. So again, the benefit of having an accountant is that tax advice as well. So sometimes you can save more in tax by having the right advice than just wait until the end of the tax year. One of the most important things, though, I would say is, if you're going to do it yourself, I'd say keep good records. I would have a separate bank account. So as a sole trader, you can just use your personal bank account. Get a separate one. You can get free bank accounts. So all business transactions go through that. You've got a record of all your income and expenses going out. Keep good records with your receipts. And then, if you're going to do that yourself, you can look back. You've got all your bank transactions, and you've got everything you need to do the tax at the end of the year. So you don't need an accountant, but it's in some cases it's definitely worth having one.
And I think you've just shown so well this evening as well, just those little snippets and insights and intricacies sometimes that can save a huge amount if you just have that expert pair of eyes that look over everything and say, actually, you could claim this, or have you thought about doing it this way instead, which is always so valuable, isn't it? Just having someone put their eyes on it as well.
I think some of the questions, I've got to say, they do depend on your personal circumstances. So how much other income you've got, how long you're going to be trading for, particularly if you're looking at limited versus sole trader. So if anyone's unsure, then what I'd suggest is just give us a call. We will have a quick chat with you. There's no sort of obligation to sign up to our services, and if we can give you some one-off advice. And obviously, if then further down the line you wanted to sign up with Gorilla, then great. But we'll be more than happy to answer any questions that you have, that are quite specific to yourself.
Oh, thank you so much, both of you. It's been such an insightful evening, and that's so kind of you as well to offer that out. I've just popped the Gorilla Accounting website and telephone number as well in the chat. So please do, if you want to get in touch with them, ask those questions. And they're very kindly, as it says up on the screen too, said that if anyone does want to go with Gorilla, who I know you touched on already, we've got like a monthly service as well. They've kindly offered 2 months free to anyone that has come off the back of VetYou too. So please do mention VetYou if you decide to go with them. You can see we've got lots of lovely thank yous that are coming in on the chat for both of you as well. And thank you so much for all the information, and thank you for your time. Thank you for your time this evening. Thank you very much. And I can see we've got a few bits coming through on Facebook as well, where we've gone live as well. So we've covered loads of questions this evening. I'm just going to do a couple of quick call to actions from the VetYou side of things as well. But if anyone does have further questions, like Richard said, about their individual circumstances, because we know, like our own patients, as much as a pet owner could go and watch a webinar on diabetes in cats, actually what the best thing for their particular cat is will depend on a lot of intricacies as well, that actually sometimes just having that conversation with someone that spent the years training and does this day in, day out can save us a lot of hassle and a lot of stress. And I know it does from my experience as well. So, and again, I can see so many lovely comments that are coming in on the chat. So thank you. A huge thank you to Richard and Rebecca. I'm going to thank you again in just a minute after I've done some quick calls to action as well. So we'd love to know in the chat what your key take home has been from this session. Please do let us know, like, what's been the snippet of information, that insight that you've learned, something that you're going to take home from this, because actually reflecting on these sessions is really valuable. If there's anything else that we can help you with, any other questions about anything that wasn't covered this evening that is not accounting, please do get in touch with us. Don't forget our full list of events. We'll pop the link in the chat box as well in a minute too, but we've got some fantastic events that are coming up. Gorilla and their team have done a fantastic blog post for us, all about setting yourself up for success for a locum in the new tax year. There's loads of snippets of information in there, and you can find that on the VetYou website if you head to the news section as well, or you can type in bit.ly/new tax year locums. Mention VetYou, you'll get yourself 2 months of free accounting, which is incredibly generous. And like we say, it's a very impressive set of accolades that Gorilla have got. I noticed also they've got a fantastic guarantee of if you get in touch before 3 p.m. with the accountant, you should get a reply the same day as well, which I think is amazing in itself. So we've been having a good look through, and that's why we've been so pleased to team up with them on this event. So we'd like to finish just before signposting to tomorrow's event with a huge, huge thank you. First of all, to the fantastic Richard and Rebecca for their time and expertise, insights, and everything that they've given to us this evening has been so valuable. We've got through so many questions. We had so many of them submitted, and I reckon we got through the vast majority of them, as well as loads of them that kept coming in on the chat as well. So we really hope this session's been useful. We've been really grateful for your time this evening. So thank you, first of all, so much, Richard and Rebecca. It's been brilliant to have you here.
No, it's been a pleasure. Thank you.
Oh, thank you. And hopefully we can do a few more of these sessions through the year as well. See if we can get you on, have your questions answered. And like we say, just signpost you to some fantastic people like we have at Gorilla as well. And thank you again to all of you for being here this evening on a Monday evening, spending it on you, having these questions answered, gaining a little bit of clarity, like acknowledge yourselves for that. And thank you to the rest of the VetYou team as well for all the hard work that they do in the background in making this happen. And we just wanted to do a quick signpost to the fact that tomorrow in the evening at 7:30 again, Paul Horwood from the VetYou team is going to be doing a how to ace salary negotiation, a whole session on it. He is not only a vet, he's a previous practice owner. He's also worked as a Marine too. He trains other companies out of the vet sector on all sorts of management, leadership, communications. He is a gold mine full of information, and his techniques really have made a difference in the vet space as well. So come along for free, get some insights. It might be one of the most valuable sessions you've ever been to. And negotiation is a skill that we use every single day, not just when we're going to a pay review or into a new job. So we would absolutely love to see you there. Like we say, that is tomorrow at 7:30. If there've been any more questions, like we say kindly, the Gorilla team have said they're more than happy for you to get in touch with them and ask those questions. And we've popped all those details in the chat box. If you do want to catch up and you're watching on catch up, we'll have all this information that's accompanying it as well. So again, just a huge thank you to Richard and Rebecca. It has been brilliant, and we really look forward to working with you again.
Thank you very much.
Thanks.